On our previous session, we were talking about POIs, that is order flows, that was order flows and order blocks. In this session, we will be looking at engineering liquidity. And without the previous sessions about order flows and knowing how to map inducement, knowing how to do the market structure, talking about the impulsive move and the corrective move, how to identify valid pullbacks, it will be very hard for you to identify engineering liquidity. That's the reason as to why its foundation, or like all those like this course is actually with parts, meaning that you cannot like start with day 8 before day 7, or like what it was meant for day 8 without without knowing what it was meant the the other days, I mean the days before it. So this is engineering liquidity, and without wasting any time, then let me get into it. So engineering liquidity, I have said it's a core liquidity, just like inducement, and its abbreviation, as you can see there, Eng LQD. That's the abbreviation. And in a bullish scenario, in a bullish scenario, Eng LQD, or engineering liquidity, is the liquidity resting below the low of the valid pullback right before the extreme PY. So right here, the keyword is liquidity resting and below the low, also valid pullback, and right before the extreme PY. So like I think that definition is very you should not miss even a single part of that definition, because excluding one will actually make the definition wrong. So as you can see there, it's actually the liquidity resting below the low of the valid pullback right before the extreme PY, and this is on the bullish scenario. In now, all right, this here is needs to be bearish scenario. This one needs to be changed to bearish scenario. So in a bearish scenario, engineering liquidity is the liquidity resting above the high of the valid pullback right before, right before the extreme PY. The valid pullback right before the extreme PY. The liquidity resting above that high. And by POI now, here you can see this is extreme POI. I've just said POI. And if you do remember on our previous sessions, we said that an POI can be an order flow or an order block. It just depends with what the trading range has given. So you can see here by POI, it can be an order flow or an order block. It just depends with what the trading range gives. So yeah, if the trading range gives an order flow, then you will be considering the order flow to map these engineering liquidities, just based on the definition. And also, if it gives the order blocks, that means that the order flows are all mitigated, or they all failed, meaning now we are left with the secondary option, which is the order block. Now we will be looking forward to marking the engineering liquidity on the pullback right before the extreme order block. Now here are the keywords. The first keywords, it's a valid pullback, like it should be a valid pullback, just like in inducement. Like that needs to be a valid pullback. So if you don't know how to identify a valid pullback, clearly you need to start with that, that is a very important part. That part one, valid pullback identification, very important part. Without that, it will be very hard for you to actually mark things correctly onwards with the true SMC journey or course or something. So it needs to be a valid pullback, then the high or the low, the liquidity resting there. That's now we'll be calling the engineering liquidity, as long as it's right before the extreme PY. And also depends if it's bullish or bearish scenario. I have said this one here is a bearish scenario. That's a typing error. Right, then another keyword, it should be right before the extreme PY. The valid pullback right before the extreme PY. So that's very important. And finally, engineering liquidity is a liquidity, not a POI. I find some people actually marking the engineering liquidity as a point of interest or like a zone, but it's not a zone actually. You can just draw, like the way we mark inducement, just draw a line. Let's say it's a valid pullback high, just draw a line at the high. and the liquidity resting above that high, that buy side liquidity, that's what we call the engineering liquidity, as long as it's right before the extreme PY. The same also on a bearish scenario, I mean also on the bullish scenario, that low, the liquidity resting below that valid pullback low right before the extreme PY, that's what we call the engineering liquidity. Right, so now with knowing this is actually the theory part. Now let's dive into the real chart so that we can apply this, or we can make this live. Right, so onto this chart, I believe we marked this chart some days back, and I'll be using it because I was with you actually here marking this chart. And this here is the extreme PY, and I say that it actually depends with what the trading range gives. If the trading range gives an order block, that means that the order flow failed, then we'll be looking forward to using the order block. But in this case, this trading range, which ranges from that high all the way to this low, it's involving like order flows. And you can see this is the decisional order flow, and this one is the extreme order flow. I like in this I rubbed off or like trashed all the order flows that we are not like valid. That means that the ones that are mitigated and the ones that are not the true valid order flows that we usually we say that in a trading range there can only be a maximum of true valid POIs. So I've just marked those valid POIs and trashed all the invalid ones. The invalid ones, of course, are the ones that are the one that is not before the, because the first one is the one that is on the extreme and it's unmitigated. Then the second one is the one that comes right after the inducement is taken out, and you can see this one here is the one that we call the decisional, and you can see this here was the inducement and it came right after the inducement. That's the reason as to why I picked that. But price, you can see price reacted from the extreme one, the one that is on the extreme and it is unmitigated. Right, so you can see this is the extreme PY, and as per the definition also you say that this is a bearish. So you can see we are actually breaking structures to the downside, so this means this here is a bearish scenario because you're actually bearish. The overall trend is bearish. So as per the definition here, we say that in a bearish scenario, engineering liquidity is the liquidity resting above the high of the valid pullback right before the extreme PY. So back here again, the valid pullback right before the extreme PY. So the liquidity resting above the high of the valid pullback right before the extreme PY. So right here, this here is the valid pullback that is right before the extreme PY. So the liquidity resting above here, that's what we call the engineering liquidity. This high here was swept by this week. So this means that you can see that high is swept. So this means that this here is the high that we are looking forward for. And we say that the liquidity resting above this high, this is what we call the engineering liquidity. So you just draw the line just like we did on inducement, and that liquidity resting above, that's what we're interested. You can see price here swept that I mean exactly right here, price. All right, so this one here is the engineering liquidity. Price swept it exactly there, but later violated the sweep and continued further to the extreme PY. It does happen. So yeah, and the reason as to why actually I have considered this sweep is because that's an entry module. The engineering liquidity sweep is an entry module. Yeah, I mean after this we'll be diving into the entry module, so there is no need to rush onto that or to talk about that. It's just making this session long. So right here to the next, after price created that bearish break of structure, you can clearly see that this is the high and this one is the low. This one is the minor inducement. In this case, I can only see that this one here is the only order flow that is on the range, and that order flow is unmitigated. So that's the only order flow available, because you can see this order flow here, price mitigated it, and I've said that I am not like, I didn't mark the order flows that price violated or price failed or price mitigated them. So I only mark, I'm only marking the ones, I only mark the ones that are valid. And in this case, in our trading range, this here is the extreme order flow, and also the decisional order flow at the same time, because there is no any other there's no any other order flow in that case, that is like in that trading range, that is valid. In this case, you should not call this one here the decisional, even if it comes right after the inducement. You can see this is the inducement, and this is the order flow that comes right after the inducement. I know that's what we check while identifying the decisional order flow, but don't call that the decisional order flow. Call it the extreme order flow, because it is the only one that is unmitigated and is on the range. Right, so you can see like in this case now, this one here, this minor inducement, it will be also the engineering liquidity, because this is the valid pullback high that so the liquidity resting above here, that's the engineering liquidity, because this is the pullback that comes right before this extreme POI. There is no any other pullback that I see here, and this is the pullback that comes right before this extreme order flow. Alright, so onto our new trading range here, next trading range, and exactly right here. So this is the decision order flow, and this is the extreme order flow. So the definition still counts, like it needs to be the pullback, the valid pullback high right before the extreme POI. This is the extreme POI, and the valid pullback, so the extreme POI is this one, and the valid pullback right before the extreme POI is this one here. I don't see any other valid pullback. This one here is not a valid pullback. All of these are engulfed inside this bearish candle. You can see this bearish candle that starts there all the way here. All of these candles here, they are engulfed with that bearish candle. So this one here is the valid pullback that comes right before this extreme, and the liquidity resting above here, that's what I call the engineering liquidity, or that's what is called engineering liquidity. So you can see this is actually easy to identify the engineering liquidity. The only part that will mess you up in identifying the engineering liquidity is you marking the wrong extreme PY. If you mark the wrong extreme PY, this means also your engineering liquidity might also be wrong. So that's the reason as to why I'm saying like you need to be good at identifying the order blocks. You also need to be good at identifying the correct valid pullbacks, because if you identify the engineering liquidity in an invalid pullback, that means that engineering liquidity is also invalid. So that's the reason as to why I'm saying like there is a reason as to why like these sessions are structured in a way that it will make it easier for the next step, because the concepts need to there is a flow in the concept, so that you can easily master through SMC. So after that, price mitigated the extreme PY. I don't know if there is some noise on my side, because it's raining on my side. So if you hear like some background noise, like too much background noise, just know that it's raining on my side. So right here, all right, price made that bearish break of structure, and yeah, I said that I usually use these highlighters to show or like to just map my highs and lows. So since we are downtrending, so that will be the the lower highs and the lower lows. So yeah, just see these ones, and I said that we are only interested with the impulsive move. So you can see this is the black highlighter, that's the impulsive move. This black highlighter and that black highlighter, that's the counter trend move, that's the corrective move, and we are not interested with the corrective move. We are only interested with the impulsive move. So here on the impulsive move, I can clearly see that the extreme order flow, and this here is the decisional order flow. In this case, price ended up mitigating the decisional order flow and giving up the bearish reaction, or the ultimate reaction. So in this case here, we say that engineering liquidity in a bearish scenario is the valid pullback right before the extreme PY. The liquidity resting above the high of the valid pullback right before the extreme PY. This is the extreme PY, and the valid pullback right before the extreme PY is actually that one. And the liquidity resting above that high, that's what we call the engineering liquidity. So that's very important. You need to know how to identify the valid pullback correctly, and also identifying PYs Yeah, and of course market structure so that you identify a correct impulsive move. So also inducement so that you know like your trading range ranges from here to this part. Once you know that, like identifying the engineering liquidity becomes easier because you already have identified your extreme POI and you just need to check the valid pullback that is right before uh, the extreme POI. I said the extreme POI, it can be an order flow or an order block. It just depends with what the trading range has given. All right, so on to the next trading range, which ranges from that high all the way to this low. You can clearly see this is the inducement, and in this case, this is the only order flow that is unmitigated. The reason is to why I'm actually marking the order flow. I explained this is because we start with the order flows. Not until all order flows are mitigated, we cannot go to the order blocks. And that's very important. So it just depends with what the trading range gives. So if the primary option fails, that's when now we'll be using the secondary option also in marking the engineering liquidity. But since the primary option is still there, then we'll be using the primary option also in marking the engineering liquidity. So in this case, this is the extreme order flow. I don't see the decisional order flow because there is only one unmitigated order flow in the range, and this is the extreme POI. So if this is the extreme POI, then where is the engineering liquidity? You can clearly see that this is the valid pullback that is right before the extreme POI. And so the high, I mean this high right here, the liquidity resting above that high, that's what we call the engineering liquidity. So this is the engineering liquidity. I mean this high, that buy sell liquidity resting above this high, that's what we call the engineering liquidity. Then here price decided to do the opposite, decided to like shift bias from being bearish to now being bullish, and the same also applies, like the same concept applies. We just need to identify the valid pullback right before the extreme POI. Once you have done that, then the engineering liquidity is easy because you can clearly see this is the inducement, and there is no any unmitigated order flows here until here on the extreme. You can see that this here is the unmitigated order flow. And so in that trading range, which ranges from this low all the way to this high, this is the only POI that is there. I mean the only primary POI, because we said that we can't use the order blocks if the primary option is still live. And so that's the extreme order flow, and that's the extreme POI. And the pullback right before the extreme POI, I mean the valid pullback, is this one here. The reason is why I'm marking that is because like this here is the valid pullback. Right, so that's the valid pullback. This one here is not a valid pullback. I know there is some people who have spotted this. You can clearly see that this one is not a valid pullback, and here it comes. Like if you didn't know that this one, or if you were not good in identifying like valid pullbacks, you may find it you may find it hard in identifying, or you may also sometimes mark the engineering liquidity, the inducement incorrectly because you don't know how to identify a valid pullback. If you know the rules of identifying a valid pullback in a bullish scenario, you can clearly see that this one here cannot qualify to be a valid pullback, and that's the reason as to why I didn't use that low. Neither did I lose this, I mean use this high, this low. And so the low that I used is this one here, because this here is the valid pullback low that is right before the extreme POI or the extreme order flow in our case here. So this is very, very important. And right into our new trading range exactly here, you can clearly see that this is the major inducement, and you can clearly see, all right, traders cursor has some problem in showcasing its candles. Sometimes it may showcase some candle structure check flow of this broker, and maybe when you close the tab and then relog in again, you may find that it may give another broker's chart. So in this case, all or on the time that I was marking this order flow, this here was a valid pullback. So this one here will be a confirmed, I mean this will be now the extreme order flow. But in this case, this one here is not a valid pullback. So this means now our order flow will be will be all these various structures starting from that high. I mean that high all the way to our trading range low. Yeah, exactly there, and it's starting exactly right there. So you can see now in this case we will not be having any order flow, and in this case now we'll be marking our order blocks. So right here I showcased the marking of order blocks. So I can see this here is an order block and it was mitigated. So starting with the extreme, like the extreme end, this here is the order block, but it was mitigated. In fact, that's not an order block because it is not associated with a fair value gap. The one that was associated with a fair value gap is this one, but we can clearly see that it's mitigated. So in that case, then if it's mitigated, it's invalid, and we will be looking forward for the ones that are not mitigated. So you can clearly see that this one here, this bullish candle is not mitigated. I said the color of the order block does not matter, so you can clearly see that this here is not mitigated. Coming up here, this one here cannot be a bullish cannot be an order block because there is no any fair value gap there. And so the order block that I'll be using is I cannot also use this because the liquidity resting below this other previous candle, like we said that it needs to be like there is need to be a liquidity sweep past the previous candle low if this is bullish scenario, and in bearish scenario high. So there is no that, so this means that in this case we only have that that order block. And yeah, so this means that the engineering liquidity will be somewhere here because this here is the valid pullback that is right before the extreme POI, which the extreme POI is actually this one here. The extreme POI is this one here. So that's the extreme POI, and in this case, this here is an order block. I said it actually depends with what the trading range gives. If the trading range decides to make the secondary option like the one, if the like the trading range decides to validate the secondary option, then we will be using the secondary option in identifying the engineering liquidity. So you can see this here price decided to validate the secondary option after invalidating the primary option, which is the order flow identification, and decided to, and we can clearly see that we will now be using the order flows because the order flows are all mitigated. And since this is the extreme order block that is unmitigated, the important thing here is unmitigated. If you consider this one here, then you will end up marking your engineering liquidity right here. But that cannot be the extreme because it's mitigated. The one that is unmitigated is this one. And now the valid pullback that comes before or right before that unmitigated extreme PY. Yeah, I think that unmitigated is also a good one to use. Yeah, it actually makes things easier because in this scenario this is extreme PY, but in that case it's mitigated, so this means it's not valid. And so the one that is valid is this one here, and it's unmitigated. So if it's unmitigated, it's valid, and it's because it is on the extreme of the trading range. Then the valid pullback that comes right before this, that's what we call the engineering liquidity. So you can see it's actually getting easier. And the same here also, you can see this here is the order flow. All right, let me just mark for the sake of the class. So you can see the order flow here. The order flow got mitigated. So onto the, all right, let me just leave it. Then onto the next right, onto the next this one here, you can clearly see is also mitigated. So this means in our case here there is no any valid order flow because all the order flows are mitigated, and we will now be left with the secondary option, and the secondary option of course is the POI. And starting from the extreme, you can clearly see this here is the candle that took out the liquidity of the previous candle. So you can clearly see right here it got mitigated even though it was valid initially because there was this fair value gap, very nice formed fair value gap, but then price retraced back with a valid pullback, mitigated it, and then reversed back. So in this case, then this extreme POI, I mean extreme order block, it's now not the extreme anymore, or you can just consider it as the extreme, but it's not the one that is valid on that extreme. And the one that is valid on the extreme is this one, because this candle took out the liquidity of the previous candle high, and as well as you can see, it actually created some fair value gap, and coming down below here, there is no any other valid POI, and in that case, I mean any valid order block, and in that case we are only left with this one order block that is valid. And so exactly right here, now this is the extreme PY, and we are now, if we are actually wanting to identify the engineering liquidity, we will need to identify the valid pullback that is right before this extreme unmitigated PY. And if I am to check, I can clearly see that the break was here. So this means I cannot pick this one here as the. All right. Let me note. All right. So this here was the break. Again, another valid here. This one here is also a valid one. And now the last one is the major inducement. So we are actually interested with this one here. So this one here is what we call the engineering liquidity. I know the break was here, but I also considered this one here because this is the valid pullback. It doesn't matter if it was available on this order flow. I mean, it doesn't matter if it was available on this order flow. You can see the order flow that is associated with that, with this order block. It doesn't matter if it's engulfed in between, as long as that valid pullback is right before the extreme POI, then that's valid. Yeah, I mean that's valid. So this one is the engineering liquidity, because this is the valid pullback that is right before the extreme PY. So this means there is no any complications or any any like complexity in identification of engineering liquidity, as long as you know how to map market structure, identifying valid pullbacks, identifying the correct POI in the range, then it becomes easier also in identifying the engineering liquidity. And so here, this year, there is no any POIs. And so in this case, you only have the major inducement, because this is the minor inducement. And we said in this case, you see, this is a single candle that spiked all the way above. So in that case, here we didn't mark the POIs. So yeah. And yeah, the process continues. That will just be a repetition, because I believe you all got the context, because the most important thing here is getting the context, and then after that it's upon you to now continue practicing. So today's session was short, but I believe you have just got what I was intending to share. And yeah, so I will end the session here, and I will now shift back to Google Meet so that you guys can ask questions.